Today I'll share with you the easiest trading strategy to use in 2026 if you are a beginner. This is without a doubt the easiest way to start trading, and I'll share with you step by step how it works on the charts. We'll go through all the rules. I'll give you a checklist at the end to follow, and you'll have all you need to be able to follow correctly and apply the strategy in the market right now. Let's dive right into it. All right, so this is going to be fun. I really tried to create something that beginners could use and that they will be able to implement fast in the markets. The strategy I trade now are good for beginners, but they're a bit more complex. So today we'll kind of strip it all down and focus on something that anyone can use at any level and still be profitable with. Just before we go out in the chart and the strategy in details here, I want to mention that beginners usually fail because they pick strategies that require a lot of decisions, a lot of screen time, emotional control under pressure, and a lot of advanced execution. Now, why do they pick strategies like this? Well, because they want to have high returns. And you can have high returns with the strategies I'll share with you today. It's just a matter of changing your risk per trade according to your risk preference and increasing your capital over the long term. Now, we need something that anyone can use in 15 minutes a day because we don't want to have you trade all day. You need to be going to work. You might have family to take care of. That's totally fine. We need to take care of that too. And trading should be something you do when you have time to do it, but not overtaking your whole day and making it hard for you to go live your life and have freedom. Okay, so let's go with the strategy. Before we go on the charts, I'll just share with you in a quick second the principles of how it works, but then we'll go on the chart and kind of go over how that works out. If you want to have a checklist that covers everything about the strategy, I'll leave it linked below. So free checklist I put together that will kind of go through all the rules we talk about so far today. And it'll be making it easy for you to be able to trade this after the video is finished. So you're able to just like print it on your desk, have it there and follow it as you trade, and it'll make things much faster. So get the checklist and come back here and follow me along with this video to be able to go through the strategy in details. Okay, so first things first, this strategy is going to be based mostly on higher time frame. Because you need to be trading just 15 minutes per day, we'll focus on daily charts. This is the easiest way to trade. Daily charts work pretty well. They're very reliable. They produce patterns and moves that are very reliable too. And we'll need to have this to be profitable as beginners. And what we'll do also is focus on only the big markets. So here I have a look at my playlist. That's the playlist I usually follow for my strategies. We'll try to stick to major stocks like Apple, Nvidia, Tesla, if you want to, Walmart, all the big companies you know. This is the stock you should be trading. If you trade Forex, then stick to the main pairs. So EURUSD, JPUSD, the pairs that are more liquid and a bit easier to trade too because they have clear trends. You can add in USD, Mexican dollar. This is a good one to trade. It's very, very trendy. JPCAD is also good. And if you choose to trade ETF, also do the same thing. Go for ETFs that are a bit more liquid and the big one. So SPY is a really good one. IVV is one that is very similar for the S&P index. QQQ is another big one. These are all the big index that tend to be very liquid, tend to move well too. And that will give you good results with this strategy. The core of this method here is all about trends. Trends are easy to follow. And as a beginner, this is probably the easiest way to make money in the market. Is just follow trends. So buy and hold, or sell and wait for market to go down, then buy after that. So you can do some short selling, totally fine. That will work well also. We need to have strong trends too. So when the market is sideways like this, we don't want to be trading because it's going to be very hard to make money. This is a more advanced way to trade. We can still make money with this, but we have to be a bit more careful about the highs and the lows. And for a beginner, that's not really the way I recommend you go in the market with. So we look for trends. Trends like this one over here on Walmart. This is clearly going up. We can see we have some times where price is going a bit more sideways and not doing very much. But for the most part, it's going up quite well. What we need to do is we don't want to ever buy the highs. We don't want to be here and seeing price makes a high and then buy there hoping price will go higher. That's what most retail traders do. People who lose money in the market do a lot is they see a price moving really high. Like they see, oh, gold is crazy now. Let's go and buy gold. And you see what happens then? The price crashes back down to big difference, right? This is like 20% in a couple of days, which is kind of crazy, kind of insane. We don't want to be doing that. So instead, we wait for pullbacks. When price goes up in the market, comes back down, that is a pullback. We need to be able to go long, so meaning buy on this pullback and have price go back up. Now, I know it sounds very, very simple, and I know it's kind of stupid. And you'll say, well, like, yeah, it's very simple, harder to do in practice. And we'll kind of simplify this for you. We'll make this very simple for you. You can either do it pure price action, which is looking at the charts, seeing these price moves, seeing price go up in a trend, seeing price come back. Okay, then you say, okay, it's good. It's pulling back. Let me buy over here. And seeing price go and continue that way. That is the way to do it. Although it's not very reliable and it's a bit harder for a beginner to do that because you don't know when it's going to reverse. It doesn't make much sense. And the other way, we'll go back to our Walmart chart here, is to be using an indicator. Not any indicator, but one that I've had good results with. It is called a whole moving average. If you go on TradingView, you'll find one that's free right over here. That makes a lot of sense. I also have my own whole moving average, which is over here. I'll put this in my charters for now. You see mine has a color here. The other one is a simple color like this, but both are fine. So we'll kind of stick to this one for now because it's free and it's there available. So I'll put it to a 50 period. 50 gives us a good idea of moderate trends, not super crazy trends. And we can go all the way down to, if we want, 20. Right? So 20 would give us a much faster measure of trends. Okay, so this is going to be a lot more entries, a lot more possibilities to go in, but a lot less reliable also. Although on, say, like gold, this is going to be really good because gold is trending really fast. Okay, but you don't have to change this multiple times. Pick one and stick to it only, and that's going to be totally fine. So we'll go with 50 because I like 50 a lot. Let me make this a bit more bold so we can see it well here. Okay. And the idea is when price is going to be above the hull and it's going up, trend is going up, we don't want to be buying. We want to be waiting for price to come back down below the hull. Think of it as if you go to the supermarket and you see the price of food. Some days it's going to be like this. It's going to be high. Some days it's going to be like this. It's going to be good. And you tend to buy when it's at a good price. Same thing goes here. So buying gold when it's over here, that's very expensive. Buying it over here, much better. This is kind of inflation anyway. It's kind of a good example. But it's just really how it works in the market. So we are looking for buying opportunities below the hull and even selling above, but only if it's going to be in a downtrend. So I'm going to go and take an example on Netflix. Netflix has been doing really well for a long time. This is a big stock that everyone knows, so it's going to do well. Netflix had a really, really good run, and then now it's doing the exact opposite. But we can trade both ways in this example. So when Netflix is, I know it's going to be kind of basic now, but we'll go to more defined rules a little bit later on. But when price is going to be above the hull and the hull is trending up, we're waiting. We don't do anything else here. We just wait for price to go below the hull. When it's going below the hull, then we can look for buying opportunities. Now, when do we know when to buy? Do we buy here or do we buy here? Well, we'll get to this in a second, but that is how it's going to work. And then look at how Netflix did the exact opposite. So it went from up to very slowly reversing, and now it's breaking down, and it's breaking down again, and it's breaking down again, and breaking down, and so on. So now we are in a downtrend, which means that in a downtrend, we can look for selling opportunities above the hull, okay, when it's going down. So we try to sell over here. We try to sell over here, and so on, and so on. See how this works? Okay, we can make a lot of money with this, and we don't need any special knowledge or any fancy analysis, anything of the sort. It's very, very simple. Now, how do we figure out the trend? Well, we have two ways to do it, right? We can look at the trend with trend lines if you prefer. So you can go in the chart, you can draw your trend lines. You can see, okay, price goes from here to here. We make these higher highs and so on, and we are trending up. And until this is broken, we do not look for short trades. We just look for buying trades, so for long trades. Now, when we see this is getting equal, this is the clear change of trend. We're making the same lows. Now, we always went up because we go from here to here to here to here and then here. And now we go to here and we come back to the same level. Now we look for a different condition, right? Even though we went beyond that, we started to reverse even more. Right? So over here, boom. Now we're getting the same lows over here, and we break below. So that means that we are in a downtrend now. So you can do like this. It works really well. Now, the other way to do it is using a simple tool that I really like on TradingView. It's called the pivot high-low. I'm going to go and unhide it here. I had it match out for the whole time. But if you want to go and find it, just go here to indicators and look for pivot high-low right here. Pivot point high-low. This is the one we use. And we can play with a setting, but what I found to be working well is the 1010 is decent. If you want to have it on a bigger term picture, you can change that up to, let's say, 2020, but that's fine for now. So what this gives us is give us just a price tag on the price at highs and then lows at a certain period. So we can very see clearly how these are moving together, right? So over here, we have these same ones. Okay, here we can see we have a trend. It goes up and equal and up and up and up and up and so on. If you make this a little bit higher time frame, like maybe 20 or 15 or 14, that will give you a good picture. You can see how clear that is now with these pivot high-low, how we are going up. So just this for me is enough information to know that price is going up. And here I see, okay, we have all these equals highs. Then we start to make these lower lows, right? And that is where I want to be trying to sell. So that's how this works out. Now, I know you're going to ask, when do we look for entering the market below the whole? When do we know it's time to go in and actually buy? Well, here's the very simple rule. Whenever price is below the whole and it's trending up, we look for a candlestick that is going to be closing above the high of the previous candlestick. Very simple. So, for example, we go here, we see price is going down, and this candlestick closes over here, right? This is basically Japanese candlestick, very simple. Price closes here. Over here, it closes there. Still didn't break the high. Then we go down. We didn't break the high. We close over here, and so on. We close over here, and now boom, we close here above the high. That is our entry. We enter right here in the market. Okay, we are below the hull. Now we could have many of these entries. That's totally fine, but we need to be below the hull, and we need the candlestick that closes above the high of the previous candlestick. So over here, we did it. We are good to go. What we'll do is we'll put an entry order right above here, and we're on the trade. Now the inverse is also true if we're going to go and sell in the market. So if we go and look for one price, it's going to be in the downtrend. Okay, you can see we've identified a downtrend from maybe not here, it's equal, but from here we know we're below, and this one who broke the low that we had over here. So we know now it's time to go and short. Again, price goes above the hull. This candlestick closes here, not below this one yet. This one closes here, below this one. Boom. So we are shorting here. We can place our sell order just below this low. As simple as that. So we don't have to look at any candlestick pattern. We don't look at any fancy textbook example. This is really the key, is closing below the low or closing above the high of the previous candlestick. That's it. No other rule than that. Okay. It works really well. It's very simple, and anyone can do this at any level. If you know how to read candlesticks, you know how to look at the high, the low, all this stuff. That's all you need to care about and all you need to use here. It's very simple. Again, if you don't have the checklist with all these rules that you can use for your own trading and print out on your desk, check out the first link below. I'll have the checklist for you for free, and you can just use it. It's going to have all the rules. You don't forget anything. You'll be able to make sure you follow the rules correctly and are getting good results with the strategy if you decide to use it. Now, how do we look at stop losses? Well, it's very simple. We need a stop loss. We don't want to have trades that can risk your whole account in the markets. So we're going to put it at the most recent swing high or swing low. In this example, it goes all the way back to here. Now, I know you're going to say it's a huge stop loss, and yes, it's pretty big, but in this market, we need to be careful, and we need to have high probability trades too. In this market, it's going to work pretty well anyway. Okay, we have all the way from here, and price went all the way to here, and even more than that. So it's worth it. If the stop loss is too big for you, adjust your size, trade a lower lot, a lower share size per trade. That's totally fine. Or just skip the trade. We want to be accurate. We want to be having good probabilities, and that requires a decent stop loss. But if you cannot hold this one, if it's too big, then just reduce your size or skip the trade. Wait for the next one. There's going to be a next one very soon. In fact, there's one right over here that will give us a stop loss that's over here, so much smaller. Okay, there's going to be a next trade. Just wait for the next one, and you can be patient. It's totally fine. Okay, there's going to be a next trade coming up very soon. If you look at doing a sell trade that we have over here, same thing goes. Stop loss above the high of the most recent swings, in this case, right over here. This will be our stop loss. Again, if it's too big, skip the trade or just wait for the next one. Totally fine. There's going to be the next one coming up soon. If you go and just look at this right here, we have one trade here, and the stop loss could go here, right? And then we have one trade again over here, possibly if you want to take that one, and stop loss will go here. Then we also had a trade over here, and stop loss will go probably above here. It's a bit too far, but there's many trades going on this. You don't have to look for a specific one. If you miss one, that's totally fine. Wait for the next one. Don't try to re-enter too late and try to make it work anyway. Just wait for the next trade to happen and you'll be fine. Totally fine. Okay, for you take profits, it's also very simple. I want to keep it very simple for you too. Look for 1-to-1 and the other part of your trade close when the trend stops. As simple as that. So here we go and measure this. So we measure the distance from this point to here and calculate how that will be. So this will be this amount. We go and move this on the other side. 1-to-1. 1-to-1 is roughly at this level. Very quick to achieve. Doesn't take much time. And we have a lot more room to go. So we close half of the trade at 1-to-1 and leave the other half until the trend stops. How do we know when the trend stops? Well, you can look at trend lines. So when the trend line here will break. So far, we're making higher highs. As long as we make these higher highs and higher lows, we're good for the trend. Okay, still higher. Now here you see a lower high. So we start to reverse here. And you can see price goes here. Boom, you close your trade. That's for sure. So either you got out at this level right here, roughly there, if you see price doesn't make a higher high, or you got out in the worst case over here where we break the low we had before. Boom. So both of these are fine. In both cases, you have a really good trade, and some strategy will get really high reward to risk, but you will get a much higher probability, and that's what we care about, because a higher probability means you're going to be more consistent, less emotions, less issues with your mindset, and just kind of win often, which is kind of cool to have. So you be good with that. As you become better in trading, you can move toward these higher risk reward strategies with maybe a lower win rate. But I recommend for a beginner to go with higher win rate. It's going to be a lot easier for your mindset and overall well-being in trading. If you were to take that next trade we saw before, right over here, we'll enter above this candlestick, and our stop loss will be below this low, and that will give us a much better reward to risk over here at 1-to-1, all the way here. And then again, we close when the trend stops, and the trend stopped in this case over here, or if you want to say over there, somewhere between. When you see price reversing, giving you these big candlesticks, that's when you know you have to get out and without making a new high. So over there, boom, 3.29 reward to risk, which is really, really good for this higher win rate strategy. In our short example, or sell trade, we are going to be entering here, there. That'll give us a 1-to-1 over here somewhere. And then we will be all the way here in profit to 2.3-to-1 or so, okay, which is really good. Even more than that. So that's quite nice. You can see how this works out. It's very simple. There's no rule that are going to be difficult to follow here. Anyone can do this at any level in trading, and you can really experiment with this if you want to. There's so much stuff on YouTube that it's too difficult to apply, or that's like focusing on day trading or like option, or these like very, very difficult, very fancy things that traders tend to fall into, but that you really do not need to become a profitable trader. Follow this if you want to. Make sure you grab the checklist below if you have any question about how this. Give a like to that video if you liked it today, and check out this video here on the screen next if you think you will like it. And I'll catch you back here right there in the video. Ciao.